Diverging opinions as well from our next duo of market watchers. We have one who's defensive, still worried about the housing and jobs, and the other who's more bullish thanks to strong earnings and an optimistic belief that we can get Europe just out of the way. Well, Michael Farr is president of Farr, Miller in Washington. He's our doomer for today, and also Keith Springer sitting here with us on the set, president of Springer Financial Advisors. He's our optimist, and we're trying to sell a little bit of hope here, Keith, on the show. So why don't you go first?
Well, there's a lot of things I like about this market. The biggest thing is the market's emotional. Everybody's negative. Earnings have been good. Let's face it, earnings is what really moves stocks. Earnings are good. We get the other things out of the way, and the market can now trade on earnings. I think Europe is they're gonna find a way.
Well, I agree with you to your first point that earnings, to a point, earnings should move stocks, right? I mean, all a stock is the future value of earnings. 68% of companies reported have beat the street so far. That said, you can't ignore the headlines like Bob Pisani talked about. We need $2 trillion minimum in Europe, and they got about 6 cents to their name. Well,
they got 6 cents, but they know they can borrow if they need to. Merkel knows.
From who?
Well, they can borrow from themselves. They can do their own lending program. The only point I'm trying to make is...
was saying before, it's not Wednesday that we're looking at here. It's potentially to the end of the year, maybe even further, that we're going to be having this Europe overhead.
Absolutely, and I don't disagree. I think it is a problem that's going to go on for a long time, but I think immediately we have some things that are going to push this market really just for the few months. To the end of the year, maybe through the first part of next year, I think the Fed's going to spend to get, we have an election coming up. I think Europe does get put off the front page for a little while. We focus on earnings, but we got to remember the market's emotional. There's so many people negative out there that the market, I really think, because of negative sentiment, is really going to push higher.
Yeah, and it is seasonally also the best quarter normally for stocks. Michael, what's your reality in all of this?
Well, I think you buy on rumor and you sell on news. You try and buy low and sell high. This market's up 14% in the past 21 trading days. And, I mean, kind of on the promise of a promise. I like fundamental valuations for the long term, but for the near term, there's so many things that are being priced in as going right. I think there's a lot of downside, and I think we're being sold a load of bull from a lot of these European leaders that just isn't going to materialize in a timely way. And when Wall Street's disappointed, I think they take us to the woodhouse.
Hey, Michael, what do you make of the fact that you get companies like Caterpillar a quarter ago telling us how difficult things appeared to be, and now it's just, it's not the same. What do you make of that?
Well, I think if you look at a lot of the longer forward-looking statements we're getting out of companies, the trend is to kind of say things aren't, we're a little concerned as we look at in 2012, and we're a little concerned for our margins. We've got some of our basic materials like copper that started to get something of a better trend in terms of cost and overhead and prices, but, I think people are just as uncertain. Corporations are uncertain.
But
There's
Michael,
no reason to get the
Michael,
cash off of the balance sheets.
To your point, this is the busiest week for earnings this earnings season. If we get through this week with decent numbers, the trend we had last week, and no huge guidance cuts, will you concede that third quarter earnings are officially better than most people expected?
Oh, yeah, I'll do that right now. I think they were fine. I don't have any problems with earnings season, and I don't have any problem. I mean, it's been great for several quarters in a row now, just terrific earnings. If you look for an economy that's driven by demand, if you're looking for a consumer that's two-thirds U.S. GDP that's out there buying, we're seeing upticks here and there, but basically you still got the paradox of thrift, and they're paying down
Michael,
debt.
I understand what you're saying is GDP, and the market is driven by GDP, and the economy is driven by GDP, but the market is emotional. It's not a computer. It's not an analytical being. And the market will react more on emotion. Right now, we have good earnings. We get Europe off the front page. We're going to have a boom in this market. So many people are negative. How can you argue with so much negative sentiment that's going to push the market higher?
What's going to drive the consumer to spend more? What's going to empower the consumer?
I agree within the long term. But for right now, there's so much negative sentiment in the economy and the market. The market is ready to, I believe, push forward. We've got some demographic problems down the road. We definitely have demand problems down the road. But in the short term, for the next 3 to 6 months, the market has overreacted so dramatically, I believe it really is set up for a nice push higher.
I don't think it's an overreaction. I think there's a lot of risk out there, and I think a 14% rally of the last 3 weeks is probably worth doing some profit taking, with all due respect.
Well, just real quick, 10 seconds. How many more percentage can we eke out, do you think, before the end of the year?
I think, Mandy, we'll see at least 10% more before we...
Another 10%?
Yeah, I really do.
Okay, thank you very much to both of you.
I agree with that. We could, but I don't think it's the safe bet.
But you got to look for income, too. You can't just go betting on the market.
Good call. To both of you, thank you very much. Great debate.